great day to talk about this. How do you short stocks? Whether you want to be like you and I, who have, I mean, I don't know an active trader alive. I shouldn't say that. It's not fair at all, but who thinks this rally has run a little bit far, a little bit fast. But, is the market overpriced? No, it's perfectly priced at this second. So I take that with a very important context check. So, but how do we short stocks? And, John, jump to the next slide if you would. But I want to hear, Jermal, walk us through this. And I want to hear your thoughts about how you use short stock when you were not only as an active individual, but when you were a professional trader.
So the idea of shorting stock positions, as we see here, is when you want to speculate on something falling, right? And I think most of our listeners, have understand that. Most people get the idea of when something is so high, you're like, okay, this is really run its course, and now I want to take advantage of, and this is, this chart. We'll talk about small stocks in a second, but usually I think a lot of people eye up something to get short when you see a much steeper incline, in the near term, right? And you're like, this thing is really run up. And if you're lucky, maybe you made some money on the way up, or maybe you didn't and you missed out and you're waiting for it to come down and it just keeps on going up. Mm-hmm. These are the times where people start saying, okay, I want to get short at some point, right? And that's the idea of the ability to get to benefit from the stock and or future going down in the opposite direction. Now, there's a lot to that, right? Like, what is extended, right? What is overbought? I mean, those are the things that you sort of weigh out in your mind. But the ability to take a short position, I mean, that's what makes trading so great, right? There's people on both sides of something, and that's the ability. Now, the idea of short stock, I'm trying to think if I've ever shorted a stock, because, for me, my education in this field went from not knowing anything and only being long stocks to jumping right into options. And once I learned about options, the ability to buy a put, honestly, I wasn't interested in shorting a stock. The hell with that. Why would I want to do that?
Right.
And we're going to get into the reasons why, sometimes you're not interested in shorting stock. But so for me, it went from being long stocks to, I knew about the idea of shorting stock. But once I got into options, it was like, well, I just rather buy puts. And so for the longest time, that was it. Looking on situations where something's going to break down on a technical, or, you're expecting bad news, you get long puts. That was one of the ways. Now, yeah, you can sell calls too, outright calls. But, that's kind of limited short situations. Whereas, the times that I used to think of getting short, it was like, okay, I've seen something run so much.
Right.
And I think it's going to have a nice quick fall, and I want to get long puts into that.
Well, it's interesting. You really, and you jumped the shark in a good way in terms of, in a great way of just going past the short stock piece and the challenge that there is in shorting stock. Let's jump ahead one, John. So, we talk about, and I use this term, and sometimes I want a neutral security. What I mean by that is I certainly don't want one that doesn't move, but I want one that's as easy to take an opinion on the upside as the downside. I want to be able to sell it and there's no quote unquote tax or extra work or anything. Now, selling stock short, you have to sell on the uptick. It's sometimes hard to borrow. When you do borrow it, you pay storage, so to speak. You pay interest on borrowing the stock. So selling stock makes the stock market not a neutral market. In other words, buying it is as easy as, picking a level, putting your money down, and you own it. Selling it short is a whole different ball of wax. So it's a much harder thing to do. And we can see here, if I'm selling 100 shares of stock short in Apple right now, that's going to cost me $7,500 to do. So an expensive alternative, the uptick rule, all the borrowing rules. I don't know. I have never done this either. And at one point, we were trading a lot of stock as part of an arbitrage strategy. That turned out to be, the stock part turned out to be expensive to do, and we unwound it. But, this makes it very tough. So let's jump one slide ahead and talk a little bit.
You did it at a firm, right? Like, just to kind of give people an idea for a second. It is, you're totally right. Like, it can be complicated. The idea of selling on an uptick when the stock is actually going up so that you can, sell it. The idea of short, making sure you're selling short or just selling long, right? Like those are interesting things that being at a firm, learning in the beginning was really interesting because it was like, oh, I didn't really know the difference, right? But then you realize like you can only sell short something that you don't have. You're not long, right? And then versus selling long. And so we had to make sure tickets were marked that way as a TA.
Yeah.
Otherwise you'd get your ass reamed out, dude. Like it was a big deal, and and not to mention hard to borrow stocks. I mean, I remember having to call our locate at Goldman to make sure we had locate to sell a stock short that was hard to borrow. And, one of the bigger things I remember was being at this, again, this is all from being at a firm. When I was at the trading firm, I was the main person who used to, as a TA, used to run what we call puts and calls, which was everything based off of dividends. We'd look through the whole firm, make sure what we had dividends in and what we had to, get rid of with the dividend coming up. And so I remember when during the time of 2008, we had plenty of positions that were long put, long stock that looked like maybe you were supposed to exercise them, but we didn't want to exercise them because we didn't want to sell short. You couldn't sell short. It was banned for a while there. So there's just some interesting stuff around, selling stock and short selling stock that, the everyday person doesn't really realize, but it's important. There's some important things to it.
Right. And you hit on it perfectly. The hard to borrow piece, AMC was the perfect example. You talk about that parabolic move. There is your classic example of, 10 to 60. I actually I traded this twice overnight and it was hairy. But 40 was a rich level for me. So when you look at the spike off times and you're the contrarian, the top piece is very tough to pick. And I think you have to take it as a given that you're not going to pick the top. If you do, fantastic. If you sold the 61s, God bless you. I would never have been that patient on a move like this. So management comes into play, but the difficulty I would use, there's not an easy substitute for a single stock, and that's frustrating. There are no single stock futures, and that's a whole different story. They'd be great to have, and it's something Smalls works on, but regulatorily, it's a very difficult animal to build. So stocks like this, hard to borrow, hard to deal with. Let's look at the alternatives. And you went directly from a long stock portfolio to the power of options and the efficiency of options to gain that short delta. John, let's jump one ahead. Another way to very effectively do this is our favorite thing to trade. Walk us through this part in terms of capital efficiency.
So that's the most, the best thing about futures, and one of the reasons I was interested in learning more, because we do have this ability to future, as it says here, futures are often quoted as the easiest way to sell stocks, and they are, because you don't have to deal with the extra costs associated with selling something short. And you don't have situations where you run into, like you said, with AMC, where it was up so high, but it got to a point where it's hard to borrow. So you could not sell short. And, then you look out, again, you look at those other ways I talked about where you can, look to buy puts, but they're expensive as hell.
Right.
Or you can, try and sell calls, God bless you if you do that. Right. I mean, you just don't know what's going to happen. So, again, this is a much easier way. Whereas like here we know the smallest contract, we can sell one of those for $750 and the notional value is, 7,000. So that's a much easier way to sell stocks versus, it helps you avoid some of these situations that we talked about.
Absolutely. So, I think most of us have, it depends on the person, but have more than one stock. We attempt to diversify a little bit in our portfolio. It may be, I look at, Facebook, Amazon, Google, and Netflix as diversification. I think you and I look at that a little bit differently, but actually if I had those four stocks, I know where to go to not perfectly hedge it, but sticks or NASDAQ futures are a great hedge. Is it perfect? No, but it is a highly correlated hedge. And I will, and I'm curious to hear your thoughts. I'll trade off perfect correlation for capital efficiency. And what I mean by that is you just hit on it perfectly. Futures are a neutral security. You can sell them as easily as buy them. There's no extra cost in selling them than buying them. It's the same margin. It's the same execution fee. It's the same everything. So the only thing that changes is your opinion. This is the tool to use. So depending on your portfolio construction or even just your bias, if you're an active trader, there's lots of different slices of equity indices to choose. Whether you want SM75, which is a little bit more like the mid caps and has a little bit different flavor to it. Now, it's very easy to go to the small exchange and find the actual stocks that make up each of our equity indexes. So you could take a look at that. We've got a great cannabis index if you're interested in that. But this efficiency that Jermal, you hit on is really the key point. I want something easy to manage that's liquid and fits exposure-wise, portfolio-wise, size-wise. And you hit on the perfect spot. A NASDAQ micro future now is $23,000. Now that is a micro, not a mini, which is $230,000. What I want is the flexibility to hedge a portion of my portfolio at $7,500.
Is that me? Am I gone? Am I the one gone?
What's that? Are you good? Is that me?
Oh,
Bonging?
Hey, yeah, I'm back.
Sorry you're back. That, there you are. You're back.
Yeah, I just rolled on purpose just to see.
Yeah, I like that. So, you know what? I think this was a great wrap up of the ability to run through selection. Product selection is an important part. We do that. I think oftentimes we end up in the same spot, but this is the reason why. It's a good journey that you're taking us on, Jermal, because you're talking from a professional's view of why you made that journey to options and then to futures. You're talking about your personal view of how you do that. So this is great. And, your continued journey of taking everyone watching through this process is really important to truly becoming product indifferent, what we pitch at the small exchange. So, I feel it's so important. I don't care what it is. And I always kid, there were some very high frequency shops I work with who would quote dirt they'd model dirt if somebody wanted a two-sided market in dirt. It was just amazing. If there was interest, they would figure out a way to make a two-sided market and quote it. So here again is we're putting the right tools together for ourselves, and we're indifferent as to them as long as they're efficient. So Jermal, thank you so much for letting me come along with you on this ride, and you'll continue it Thursday with Mr. Franklin Caverno.
Yeah, I appreciate you letting me drive in every now and again, but that shows some real trust in you. You know what I mean? Like that's very nice.
You're the man, my friend.
Try not to drive us off the road.
Yeah, good deal. Well, guys, stay tuned because we got Splash into Futures coming up next, and we'll take a look at these markets, see if we can get some trades on.
Yeah.
See you back here in just a little bit.